Hello, we're back. Today, we are going to talk about two important things in our community. Is the bull run in the crypto market. The interesting details about what drove those bull runs, and I'll give a market update. The crypto market has experienced several notable bull runs, each characterized by unique drivers and market dynamics. For example, in 2013, there was a bull run driven by increased media attention. Bitcoin began gaining mainstream media coverage, introducing the concept of cryptocurrencies to a broader audience. The second thing was the emergence of exchanges. The establishment of early crypto exchanges made trading more accessible and contributed to increased demand. For example, the price of Bitcoin surged from around $13 in January 2013 to over $1,100 by December 2013. The market experienced high volatility with rapid price increases followed by significant corrections. The 2017 bull run was driven by ICOs and global interest. The rise of initial coin offerings led to a surge in new cryptocurrencies, attracting substantial investments. Increased global awareness and adoption, with more merchants beginning to accept Bitcoin. Bitcoin's price escalated from approximately $1,000 in January 2017 to nearly $20,000 in December 2017. Indicators like the relative strength index signaled an overbought condition before the subsequent correction. The bull run of 2020-2021 was driven by institutional adoption and macroeconomic factors. Major institutions, including Tesla and MicroStrategy, invested heavily in Bitcoin, leading to credibility of the assets. Economic uncertainty and inflation fears during the COVID-19 pandemic drove investors towards alternative assets like cryptocurrencies. Bitcoin price rose from $7,000 in January 2020 to an all-time high of approximately $69,000 in November 2021. The moving average convergence divergence, the MACD, indicated strong bullish momentum during this period. And then if we look at the bull run of 2024-2025, this one was affected by regulatory developments as well as institutional products. The re-election of Donald Trump in November 2024 brought a pro-crypto stance, including plans to reduce regulatory hurdles and promote the US as the crypto capital. The approval of Bitcoin exchange-traded funds in the US provided investors with more accessible investment vehicles, contributing to increased demand and higher prices. Bitcoin's price surpassed $100,000 mark for the first time in December 2024, reaching an all-time high of approximately $103,713 dollars. So it was $103,713. It was the all-time high. The market indicators such as the MACD and the RSI signaled strong bullish momentum. While earlier bull runs were primarily driven by retail investors, 2025 have seen significant institutional participation, adding legitimacy and credibility to the market. The 2024-2025 bull run is notably influenced by favorable regulatory developments, contrasting with other periods where regulatory uncertainty often hindered growth. Each successive bull run reflects a maturing market with increased liquidity, more sophisticated financial products, and broader adoption. Understanding these patterns provides valuable insights into the evolving dynamics of the cryptocurrency market. This is important because I want the community to have an idea of what is sustaining these different bull runs. The last one we spoke about is 2024-2025, and there we're talking about Trump's presidency as well as the regulatory friendliness to the crypto market, which is the point at which we are. Now, what is tempering the current market performance is also the tariffs on the other side that are creating uncertainty in terms of market sentiment. It is important to understand that We are in a bull run, but this bull run also represents institutional adoption. What does institutional adoption mean to cryptocurrency? It's good on one side because this is what we wanted, the adoption of cryptocurrency as a legitimate form of currency and store of value. But on the other side, it means we are also open to the ebbs and flows of the general market, financial markets, and macroeconomics, including geopolitics. That's why in this channel, we spend a lot of time giving fundamental analysis of the world we live in and its impact on the trading environment. So as much as we talk about crypto, the trading environment affected by the macro and geo cuts across. You may be trading in stocks, equities, tech, foreign exchange, or commodities. The fundamentals and geopolitics we speak about affect all of those. It is important that the traders in our community take this into account and use the information we provide as the basis for further research to understand where they expect the market to move and the actions they need to take. Okay, let's close this program by looking at crypto for the past 24 hours. The global cryptocurrency market capitalization stands approximately at $3.44 trillion, marking a significant increase from 3.68 of the previous session. The total volume of cryptocurrency trading has been around $133.3 billion, showing a decrease of 22.53% from the previous day. Bitcoin's market dominance is currently sitting at 56.77%, with a slight increase of 0.47, reflecting a perceived stability in the market. The fear and greed sentiment is sitting at 41%, suggesting traders might be cautious or bearish in their outlook. What are the leading narratives? BTC priced at around 96,133. Bitcoin maintained its position as the leading cryptocurrency by market cap. Its slight increase in dominance suggests investors might be moving back to more established assets amid market uncertainty. Trading at approximately $2,675, Ethereum has seen a mixed response, with some sources noting slight gains but others highlighting a general market downturn affecting its price. There's mention of Goldman Sachs ramping up the Bitcoin and Ethereum ETF offerings, which could be driving some of the interest in major cryptocurrencies. MDEX is the top gainer with about a 42.666% increase, and then Green Satoshi token is up by 31.666%. Clearpool is up by 5% in the past 24 hours, and BNB increased by 10%. Terra is up by 5%. The losers, Engine of Fury, dropped by 20.5%. 11.1, Credify saw a decrease of 20. 37% Rainmaker Games had an 18% loss. Parachain had a 14% loss over the past 24 hours, and Layer dropped by 20%. The Fear and Greed Index indicates caution, possibly due to regulatory news or economic forecasts. The market volatility could be linked to external factors and regulatory development. Certainly, the tariffs have been affecting market sentiment, and hence fear and greed are related at. Ethereum's role in DeFi and smart contracts continues to be a fundamental driver. Recent gains might be tied to ETF news rather than fundamental growth in its ecosystem. Goldman Sachs' involvement in ETFs suggests growing institutional interest, which could stabilize or boost the market in the long run. Holding above $95,000, which has been a technical support level, could be critical for short-term movements in Bitcoin. If Ethereum maintains above $2,600, it might suggest a consolidation phase before another potential move up, especially with the ETF flows. The altcoins' significant gains and losses, like MDEX and Parachain, indicates high volatility. For tokens like MDEX, a breakout above recent highs might signal continued bullish momentum, whereas losers like Bearer Chain falling below key support could lead to further declines. On moving average, for major tokens, staying above moving average like 50-day or 200-day moving average could signal bullish trends, while dropping below might confirm bearish trends. And I think this is important for traders to take into account. Hence, I spoke about what drove those other bull runs that we've had in the past and the one that we're currently in now. The 50-day moving average and the 20-day moving average are important to note. Staying above these two could signal a bullish trend, while a drop could signal a bearish trend. Also look at the 50-day moving average and the 200-day moving average to see where the price action is at. Is it above or below? The decrease in trading volume could suggest a lack of strong conviction in the current price movement, potentially leading to a consolidation. It's important to understand that volume coupled with the analysis of the 50-day moving average and the 200-day moving average indicates the price action, whether it's above or below the line. Another element of confirmation is looking at trading volume, because trading volume will tell you whether the money is coming in or not. We see a consolidation market. The crypto market over the past 24 hours has shown signs of both opportunity and caution. Leading tokens like Bitcoin and Ethereum grounds, while extreme movements in altcoins highlight the speculative nature of these assets. Investors should keep an eye on regulatory news, institutional involvement, and technical levels for strategic decision making. Remember, crypto markets are highly speculative, and past performance does not guarantee future results. And therefore, you have to be very close to the tokens that you are trading or the narrative that you are trading. First, you understand the fundamentals of the narrative in terms of what is happening, the developments that are taking place, but also you then do the technical analysis on the token themselves. Look at the 50-day moving average, the 200-day moving average, see where the price action is, and also if it is above, confirm that with trading volume. You always have to use your relative strength index to see whether it's overbought or oversold in terms of your token. These indicators are important for confirmation so you can have a strong conviction. Your conviction must be backed by trading volume. And that volume must confirm the bearish sentiment with the 50-day and 200-day moving averages below the price action. These technical tools are crucial when coupled with fundamental tools to decide your actions. Every time I do my analysis, I want to factor in both technical and fundamental analysis to help the community understand decision making better. Or how do you do confirmations before you then confirm whatever price action and therefore position you need to take, or whether you need to go in or not, whether you need to long or short. I hope these things will be helpful. Please continue to provide me feedback in the comments down below. It really helps me to understand where the community is at and also to assist the community to make sure that we don't leave anybody behind. May you have profitable trades. Talk to you in the next episode. Bye.